Welcome to RegNut, your source of news, views, and knowledge on all things risk and regulation. I'm Waleed, and today we'll be looking at IDD, Insurance Distribution Directive, for those who are familiar with it. So, if you are working within MGA, insurance brokers, or selling insurance products, then stick around and get familiar with IDD. If you're new to these videos, just bear in mind we do everything in one take. It just keeps processes easier at our end. So with that, let's jump into Insurance Distribution Directive 101. A basic comparison between IDD and Solvency II. So Solvency II is for insurers what IDD is for insurance intermediaries. So it covers anyone who's selling insurance products but not really taking on the risks because that's what the insurers do. So that's actually, let me just activate my pen here. So that's where the insurers live. It covers anyone who's distributing, including those sort of travel websites that try to sell you insurance products towards the end. So it's applicable for them, but it's a lot light touch for them. So that's what I'm going to say about IDD versus Solvency II. So you get a bigger picture. It's worth quickly talking about the funnel of regulation. You probably don't like the word, but it starts. So IDD sits at the top of the food chain. So this is the directive that's been pushed out by the European Commission. Right at the top, it has the widest form of interpretation. So it sets out the principles that European market as a whole would follow. So that's why it's the D stands for the directive. So it came out in 2016. You then have the European Commission again building on top of this under the guise of delegated acts or implementing standards. And there are different flavors of that. So you have the ITSs that apply, so implementing technical standards that apply directly to companies versus the regulatory technical standards that apply to regulators who then apply to the companies. You then have EIOPA that sets out more guidelines. And again, it's just starting to get more specific. So the narrower this funnel gets, the more pointier and specific the regulation gets. They set out some guidelines, but for the purposes of IDD, both the delegated acts and the EIOPA there is quite thin. You then have the FCA, so below the, what's my phone? So below the dotted line is where you start entering into a member state. So in this case, UK. So you've got the FCA, then building on top of this, or making it specific for the UK market. The way the FCA works is they first push out a consultation paper, which is telling people what we're going to do, and then a policy statement, which then crystallizes some of the requirements of a consultation paper into rules and regulations. There were three main ones. The number here is just 17 is the year it was published, and 7 is sort of the document it was in the suite of documents that were published by the FCA that year. And then the key thing here is the policy statement started coming out in 2017, and the last one was in 2018 when they sort of locked it down. And then it ultimately makes its way to the FCA handbook. Not super relevant, but it's useful to know how the sausage is made, so to speak. So today, obviously, we're only focusing on the IDD, the widest, most principle-based rules. And appreciate that a lot of people focus more on the FCA handbook and how it applies to me from sort of the layer that is closest to me, the regulator, whereas the European regulation is quite far away. But it's always good to have a look at the principles of what the regulation is all about to get a better appreciation for it. Appreciate that this message might be lost in some of the non-compliancy people, but I'll make this video simple enough for you to follow to get a feel for the IDD. I think that's all I want to cover on this piece. So here's the IDD directive on the slide. So I'm just going to focus on here. Sort of, I'll talk you through it. There are 41 different articles, but rather than sort of going in article by article, it's worth just sort of zooming out and looking at what the directive is all about. So recitals set out the outcomes you're trying to achieve from a regulatory play. So these are, you can skip them if you'd like. They make for good read if you have the time and the patience to read it. But ultimately, because the principles are so generic, When something is unclear how, let's say Article 6 is unclear how it particularly applies to a particular situation, your first protocol is the recitals to see what the principles are. And then you work your way down that funnel to find out how, as things got more granular or more specific, how they were then teased out for your specific case. If this makes sense, perfect. If it doesn't, let's move on. The green bits are the articles 1 to 9. It's all about the scope, the definition, how do you register, whether you're doing, this is the freedom to provide service, or whether you're landing into other member states through branches. A lot of this is directed at the regulators to say, hey, make sure you do these things when someone is operating or undertaking an activity that's set out by IDD. The blue bits is where it starts getting interesting. So it's about the organization requirements. So if you've come across the 15-hour CPD, so continuous professional development requirement, that's coming straight from Article 10 of the directive. So the highest level of regulation out there. It also sets out some PI cover. So what are the limits of the PI cover you're expected to have by law at the very top level? But obviously, as you trickle down, the FCA may have specific call outs, or they will sort of top those numbers up based on the activity you're doing or making it more specific for the UK market. So if you are not a compliance spot and want to have a read through some of these directives, I've sort of flagged them as in the Articles 10, 18, 19, 20, 23, and 25. If you read those, and you're in the business, that gives you enough to have a better command of IDD and be able to sort of more intelligently speak with your compliance guys, if that's your thing. But that's where we want to get you. We want to get you to a place where you can not be shy of some of these hard documents and be able to communicate with your compliance teams more effectively with the business lens around you. The orange range from 17 to 25, that's where all the meaty bits are. So this is about the information required and the conduct experience. So this is where you're really looking at what you need to provide the customer before a policy is signed. There's some specific requirements that they talk about. They talk about managing conflicts. So this is between the distributor of the insurance product and the end policy customers in this particular case, and the conflicts you might have by pairing up with an insurer or a third-party supplier and so on. So definitely what's 18, what we'll do is we'll also look at 3 different articles just so you get a feel for it, of how to quickly read these things without getting scared. But those are the ones I recommend if you are in insurance intermediary, definitely worth looking at. The one where it starts turning yellow, that's where it's the same information requirement, but it's for insurance-based products that are selling, that's got an investment angle to it. So from 26 to 30, they sort of repeat on what the 17 to 25 cover, the orange bits, but it's more specific for an insurance product with a investment rider on top. The bits, then sort of the article starts winding down, and the purple bits are where it talks about how to discipline firms that are not playing by the rules. And then the last bit is just housekeeping, which says how the old directive switches off, this new directive comes on. And one thing to note on these sort of maroon versions is that this is where you also capture or put in hooks for developing additional details in the implement or delegated acts layer or the implementing standard. So here the things, so these articles, so 25, 28, 29, 30 have got hooks in them, which allows European Commission to then build more granularity below it. So that's where when you go to the second layer, you can't just write on any article. You have to build hooks in to then build or beef up the implementing layers. This is that layer. So that layer, for that layer, they can only develop additional guidance or expanding on the principles set out in Article 25, 28, 29, and 30. So that's how that works. So yeah, so very, very high level view of the directive. If you want to read the articles, there are what, 1, 2, 3, 4, 5, 7 odd articles that you can read, and get a good sense of the directive. And the other bit thing about it is, I'm just waffling a bit, but it's a bit like this, where this is the start and this is the end of the directive, and the bulk of the bits that you care about are sitting in the middle. So that's the orange and the blue, orange, and the yellow section. Let's go through some of the articles. So let's look at Article 10 that I talked about. So this is where you can start seeing things about, it talks about possessing appropriate knowledge. So this is the fit and proper requirements, if you're familiar with. Here it talks about the 15 hours of CPD, continuous professional development. Effectively says the competence insurance, it's about professional training and development per year. Down here it talks about things not applying. So some of these requirements are not applying to everyone in the business. It talks about, it applies to people working in insurance or insurance undertaking, reinsurance. So intermediaries, only the relevant people who are responsible for distribution. So again, I'm just underlining things I've highlighted, but it's just, it's a bit long-winded way of saying that it doesn't apply to everyone. It also mainly applies to the people responsible for the distribution piece. So this helps you start drawing the proportionality line of where we are sort of holding our people to a higher standard. Who are those people? That it's sort of not everyone. It also talks about sort of a clean criminal record. So that's a DBS check sort of thing. Here you'll also see sort of in paragraph 4 something about professional indemnity, and it talks about you need to have at least 1.25 million for each claim and 1.85 million for all claims. So the aggregate limit needs to be that. So if you're getting a PI insurance, it's definitely worth keeping this in mind. But then obviously you're probably going to do a top up on top of that based on your business model and the type of customers you're serving. Actually, that's probably one also worth highlighting, that that's where the capital requirements come in. Oh, that's a very poor scratching there. But yeah, 18,000 or 4% of the sum of the annual premium received. And this is to do with the client money and how much you're holding client money, and based on that, your capital requirements set. So yeah, so you start building, just by reading this one article, you start building some of the requirements that are coming through from IDD. Article 18 is another one. The reason for highlighting this one is because of how it applies differently to insurance intermediaries versus insurance undertaking. So this is where you have the balance sheet exposure. This is where you're the carrier. These requirements apply to the intermediaries where you're just selling. And you can see the requirements, the first 3 requirements are the same for both. So identify the company that you are, etc. But there's some additional requirements which are specifically for insurance intermediaries. I won't read this, but just to give you a feel for how you can almost disregard bits of the articles and the regulation based on the activity you're undertaking. And finally, Article 25, this is something I'm seeing more and more regulation built around the product oversight and governance committees. Having worked with a number of clients, I know that, how to put it delicately, the product governance piece doesn't tend to be the most robust piece in many businesses. They do a great job on product launch. It goes through a number of steps and gets signed off. But where I've seen it doesn't quite meet the mark is on the ongoing review. So every 12 months, you should be looking at what are the loss ratios? Are we selling it to the right people? Are they getting value out of it? And so on. And the directive, actually, for a very high-level principle-based document, it goes into somewhat of a detail around requirements of identifying the target market. And the one that sort of I enjoy the most was the fact that you have to relevant risk to such identified target markets. So you have to constantly look at the world from the perspective of your customers and how their risks are evolving. And as their risks evolve, is your product evolving to keep up with that? Because often what happens is you've got a product in force that was designed a couple of years ago. Even, I guess, in this post-pandemic era, 12 months is a long time, but effectively, sometimes you have products sitting there for 5 years and they have they haven't really evolved. They've just been sort of rolling over, and you don't. Whereas your customer risk profile has evolved. So it asks for a regular review of these products. And if you were asking me, I would probably put it as 12 months minimum. So every once a year, you should look at all of your products in your portfolio. But it could be even more frequent, like every 6 months, depending on the product you're selling and the pace of change in that particular space. Cool. So hopefully, it's ran through 3 articles. Hopefully, this gives you a sense of how to go about reading these articles. Maybe take away some of the fear factor. But that's all I wanted to cover. The key takeaway is, I guess, slide on like IDD and on the slide. And if you really want to focus on it, it's Article 10, 18, 19, 20, 23, and 25. And if you are selling insurance products with an investment investment lens to it, then just have a look at the yellow circles. And with that, I shall leave you to it. Have a good day, and till we speak next time.